It's time now for the Wall Street Beat, the most talked about stories in finance. And first up, we have to talk about none other than Bill Hwang, found guilty of criminal charges stemming from Archegos' 2021 collapse. And remember, it's him as well as his co-defendant, the former chief financial officer of Archegos. This was a heated trial. Paul Davies of Bloomberg Opinion asked a good question. Could Archegos happen again?
It's a great question, really. And I mean, I think that's everyone's worst nightmare, right? That when you think about the black swans that are still out there, do we have something like that hiding in plain sight? Is there another $36 billion family office that is just being a little bit too risky?
Yeah, I guess it was interesting to see. I mean, the testimony was amazing, right? And to see the relationships between these traders and their prime brokerage, they were so chummy that there was just too much trust, and that's what made it happen.
And some things in the market have changed. Of course, Credit Suisse is no longer really in this market, but some things really haven't changed. They tried to really change up swaps rules. They tried to change up family office rules. None of that happened at the end of the day. So time, I guess, will tell.
And there's some great details, a lot of TikTok that has been in the reporting around this case. I thought this was interesting from the jury. We were talking yesterday about how the judge was saying that both sides were boring the jury, but one of the jurors who asked to remain unnamed, he said that he was on the fence during most of the trial because he worked on Wall Street for more than 3 decades. But he said that Hwang in the end condemned himself because he was trading on such a large scale and had that manipulative impact on stocks.
Can I just shout out to Chris Dolmetsch?
Yes,
the Bloomberg reporter who covered this did an amazing job. I mean, following what he was doing in the T-Live, and he was covering other trials as well.
He was.
So working around the clock. Chris Dolmetsch, you have to write a book about this trial.
Ava Benny Morrison and Sridhar Natarajan and Miss Relina Golfapoulou, just a total all-star cast. But next up, inside Ken Griffin's Citadel Securities, a strategy for handing even more of Wall Street's trading over to the market maker. That strategy is starting to take shape. It's a nascent strategy, which would have firms deal with clients here. Citadel Securities would be dealing with banking clients, while Citadel Securities handles the behind-the-scenes mechanics. It's fascinating, guys, because this is a year in which they're already on track to hit half-year profits, according to Bloomberg's reporting. And remember, this is an extension of what we've seen bank trading desks weakening under capital rules. It ties into the broader story, and Ken Griffin really coming out on top here.
Yeah, really timely story. I mean, just to oversimplify it, it sounds like this is basically white label trading that they're doing, right?
It is, and it's interesting. It reminds me a lot of what other firms like Jefferies and Co. have been doing, because they have been outsourcing trading to other investment banks, while the biggest of banks have more and more constraints, and instead turning to things like prime brokerage, lending to hedge fund clients, instead using those balance sheets when it works.
But it is just another story of these big banks losing business to upstart competitors, right?
You know, this is not quite the same, but you think about just these like synthetic risk transfers that are happening, hedge funds that are taking on loan books from banks, and that's exactly another extension of just banks offloading to the non-banks in a bigger and bigger way.